There we go. It's gonna take me a minute to get used to this YouTube OBS thing. Appreciate you guys letting me know. Everything should be good now. Let me make sure on my end. It's gonna take me a minute to get used to this. All right, guys, we're good to go. Appreciate you guys letting me know. Thank you very much, chat. All right, we'll start again. Happy Wednesday, guys. Good morning. Hope you guys are doing well. Online man, yo, what's going on, brother? Moralitos, Yannick, good morning. And how lovely that you're doing this for everyone, Dylan. Thank you. My absolute pleasure, Ann. Glad to have you here. Alex, why can't we hear? Everything should be good now. Jeff, good morning, sir. Mike is on mute. Thank you. Thank you, Samad, my man. All right, guys. Good morning. All right, so let's get into what we're looking at here. I will be having the chat off here for the most part. Number one rule of YouTube, don't look at the chat while you're trading, right? So Amp Live here in the bottom left. You guys just saw the disclaimer. If you didn't, rewind the video, go back to that. Again, nothing I'm sharing here is financial advice. It's education, my opinion, and what I'm doing, right? I'm in no way telling you to buy or sell. You need to know what you're doing, take the risk based off what you're looking for, and I am not a signal service, right? So just so that's clear up front. Glad to be here with you guys. Julio, my man, good morning, sir. Got my 30 points on the 910 short. Might not be much, but bread and butter. Absolutely, my man. There you go, brother. Small hits pay really well, and over time, they pay extremely well. So keep up the awesome work there, my man. So, all right, guys, let's break it down here. Top down, what I'm looking for. So the daily bias that we had from Morning Joe, Morning Kevin. So the daily bias that I gave you guys on the weekly outlook here on Sunday, absolutely money, reaching 1, 2, and just stopping just short of the third target. I still think we have much more downside to go. I'm still bearish this market, and it gave us a lot of the signatures that we wanted to see, right? So these relatively equal lows here are now a nice draw. That's what I'll be looking for today on the daily candlestick. However, there is one thing I'm weighing out. Given that we've dropped so much from Friday to now without any significant retracements or run on buy side, we could see a retracement. And if we do, how far would I be willing to see the market retrace? I'd be looking for this daily gap here. So this daily gap would be as far as I'd want to see it retrace. This gap here is a breakaway gap. So if you guys recall on Friday, I told you guys my first couple targets is this low here and this low here. What tells me whether or not we get to this low? Do we leave breakaway gaps? Do we show bear signatures, right? Like this inversion gap could even get up into it. Things like that tell me the market is extremely heavy. So looking for continued bearishness today. I'm not looking to buy this market, but that doesn't mean I can't take a long setup. So just to cover that with you guys, if I do look to take a long and I'm trading counter trend, counter the weekly daily candlestick, which again, we covered on Sunday, gave you guys that the weekly candlestick would be heavy, right? The daily candlestick would be heavy. When that's the case, I don't try to take long setups, but if a long setup forms something I like, I will take it, but with reduced risk, which makes sense because if you look at the, now rolling into the hourly chart, what do you think's been the most profitable trades this week? Obviously on the short end of the market, right? Which is why daily bias and higher time frame top-down analysis is so important. So let's go ahead and take that off here. We'll leave this daily gap on. All right, let me show you guys the levels I'm working with here for today. Let's get the midnight opening on here. Pull this over. Do not disturb is on. All right. So we have this daily low here. Keep that level in mind, and then we stop just short of that here. So this is going to be the previous day's low, important level. And then I'm watching this hourly gap in here. Let's make that, we'll make that gray. I like how we traded up into it. We bumped the buy stops here, but we're staying in the lower half. For S&P, seeing the same deal, fair value gap. NASDAQ is weaker than S&P, trading higher, but look at the bodies. Bodies stopping there, wicks coloring outside, that's fine, but the body's telling the real story that the market is bearish here. So I'd like to see us stay below this hourly gap and then look for further acceleration to the downside. S&P has been more bearish. S&P's actually delivered this target here that NASDAQ has not yet. So I'll look for NASDAQ to be like a 6-hitter and look to catch up with ES that has already taken out this kilo here. And then I love these 1, 2, 3, this triple bottom down here. I think that liquidity is going to get toasted here pretty soon. So working back down to the hourly chart, again, top down, market staying in the lower half, breaking down. We have a new day opening gap here. I have this on one of my other templates, something you guys want to be mindful of here today. For downside targets, we have this large wick here. So what I'll do when that's the case is we'll pull up the dealing range, and then I want to have that midpoint there. So we have the midpoint of this wick here. That's a key level. And then through that, we have sell side down here. All right, 15-minute time frame. Again, we can see we're staying in the lower half of that hourly gap. We did trade higher, though, and bump the buy stops here. So here we've had buy side taken nicely on the 15-minute chart. And now where's sell side? Here, they already delivered that. So this sell side here has already been delivered. I'll leave that there. We have this low here, which is the Asian session low. This low here, which is the previous New York PM session low. And then this is the previous daily low here. Oops. Previous daily low down here. And then keep in mind that midpoint of that wick, that's on that hourly time frame. Let's extend the midnight opening price through as well. Always want to be mindful of that opening midnight and that opening range that happens at that time. So let's drop down to the 5-minute. So 5-minute, just give more detail here on the 15-minute chart. We can see they left equal highs, ran up into those highs after selling off. So they drop it, build buy stops here, and then they clear out those buy stops and just a nice breakdown. Nice gaps being left open here. So we're starting to see some breakaway gaps. So we should see a clean run this morning. Looking at the economic calendar here today, no high impact news, just medium impact news for today. So I don't have a lot of focus on the economic calendar since it's just medium impact news. So no high impact news, which is why I'm also here tape reading with you guys. The days I'm looking to push the hardest in my trading is days with high impact news. Doesn't mean there's no opportunities on days with medium impact news, just a preference of mine. All right, so let's work down to the 1-minute chart. We're at the 9:30 open. We're opening with a gap higher. Here, so you're going to want the quadrants on that. So there's mid gap from the open. And then we'll go to electronic trading. I'm not going to have this Fibonacci on there too long. I don't want it to be too much on the chart. But again, everything's bearish, buy side taken, so we're likely just going to get a drop straight at the open here at 9:30. All right, so I'm going to take off this fib, but do be mindful of that opening range gap on your own templates. All right, so first target delivered here on that 15-minute chart, the Asian lows. So through that, we have, again, that PM session low and then all these levels I gave you here on the downside. All right, so let's see what we have to work with here this session. Working the current new day opening gap. Let me show you guys that range here. You know what I'll do? I'll pull up the template that I use. Big shout out to my man Spencer, best coder in the game. Let me go ahead and pull this up for you guys. New tab. Show you guys my fresh new indicators. And if you do want to check out my man's indicator, it is BenderBot on TradingView. So this is the current new day opening gap I'm watching here. So I'll keep that up just in case I want to refer to it. But I like to keep the chart I'm trading on clean. So far 9:30 open. Want to be patient here. Not in any rush to do anything. We did get a gap fill. Well, didn't fill the entire gap, but filled over 75% of it. Richard, morning. Thanks for the opportunity. Yeah, glad to be here with you guys. Glad to be here with you guys. I want to see this low here as well. So like we were covering, pre 930, they already bumped the buy side here. So what I'm looking at in this market structure is I don't need to see a big Judas swing higher at 930 because we've already seen that run on buy stops here. Ideally, I prefer 930 do this, and then it's really easy to get short for this leg here. But since that already happened pre 930, I'm having to work with the market structure they're giving me today. I'll pull up S&P here on the right side since this is on my big monitor. So far, first 2 minutes, being patient here. A lot of overlapping price action. Want to see a fair value gap form. Work with that here for this session. But again, with what we discussed already, everything in the market structure is already poised to just sell off at the open. Watching this gap here, extending this gap through that was on the buy side of the curve. Want to see how that performs here on the sell side of the curve here. So make that IFEG with the dotted line on here. So if we're going to stay below that, that'll set the stage for a weak run if we stay in the lower half of that. So while I'm waiting here for the opening range, first few minutes, what are you guys looking at today? You guys bullish or bearish? Is 931, 932 candle a BPR? Screen is frozen. Let me see what I can do there. Yeah, screen should not be frozen. No. Yeah, Abraham, I can see that, bro. What's the solution? Yeah, I see it's frozen, guys. Appreciate you letting me know. Hey, Abraham, what's the solution? I'll check the Discord. For those of you guys that can hear me, so you can follow along, the fair value gap I'm looking at is the 5-minute fair value gap that formed last night at 9:15. So 9:15, 5-minute candle. That's the gap I'm watching right now. All right, should be good now. Don't know why it does that. Have to restart the OBS software for some reason. All right, guys. So let's get back to what I was talking about here. So 5-minute chart. 5-minute chart was watching this inversion fair value gap here. See if they wanted to use that, send price lower. So far, we're trading above it. Again, which is why I want to be patient in the first few minutes of trading. First 2 minutes of trading, I'm never in a rush to do anything. I want to let the market show its hand early on. And even though I was bearish, yeah, we did get this target and this target delivered. I'm not in a hurry to jump in impulsively at the 9:30 open. So we got our first presented gap here to work with. That'll be this fair value gap here. All right, should be good. Appreciate you guys letting me know in the chat. We're good now. Thank you, guys. Think it's because you're switched your monitor screen? Yeah, that could be. Yeah, appreciate it, Omar. Overall bearish. All right, so we got our first fair value gap to work with. Let me get that on my other templates. All right, so before I go short, right, like what is it that I wait for if I'm looking for lower prices? I want to see some type of retracement into a premium inefficiency or run buy stops, because then that'll set the stage for a clean run to the downside. So while we're down here, sure, it could keep dropping, but it would just go without me. And then I'd have to either get into a later entry or just let the price run go. But what I wait for most times if I'm looking for lower prices is that run higher into some measure of buy side liquidity, which we've seen here. All right, so now what I'm watching is this first fair value gap. Right now that we've taken buy stops, do we break down through that gap? So ranges are pretty open today. I'm going to keep my risk really light. Another reason I'm keeping risk really light as well is because we're at the end of the month. I've absolutely crushed it this month, absolutely banking, and of course, all done live. So what I go into at the end of the month is more capital preservation mode, and I lean on my risk management to carry me through the month and stay profitable, right? So once I already make really nice gains for a month, and then I'm in that last few days of trading, like what's today? Today's the 26th. So you just got a few more trading days of this month. I'm not going to risk all the gains I've made, right? So how do you close out a month? Make sure you're profitable at the end of the month after you've made gains. It's skill set like these that I've learned over time because I've been in situations where I worked hard, stayed disciplined all month, get to my desk, sit down, open up my charts, and in just those last couple of days of the month, completely undid all the profits I did. And that was a lot early on in my career. Very frustrating. So I had to develop protocols to not only make sure I'm able to make money, but I'm able to close out the month profitable, right? Keep the money I'm making, right? Which is really every trader's main goal, because I'm sure everyone's able to find winners. But of course, keeping that money, now it's a whole different story, right? So run on buy side, breaking down through that first fair value gap. So what I'd like to see it do now is, now that we're closing below that gap, after running buy stops, I'd like to see it hit the low end of that gap. The ranges are massive. Like this 1 minute candle, 55 points. Wow. Crazy volatility, guys. Never been seen before. Market's doing the same things, but the volatility's off the charts. So I want to stay patient, want to see if they can give me that first fair value gap, use it as an inversion. Nice. So I want to see us stay in the lower half here. All right, I'm going to drop down into the micro. contract here. So there's that first fair value gap. And then let's look at the sell side targets here. Here. All right, so right now we have a fair value gap here aligning with that first fair value gap. So I want to see us stay in the lower half, send price lower. I like how they left equal lows here as well, and that sell side. Let's bump this up to 6. All right, market respecting the lower half. And going with light risk here. Stop loss goes above the first gap here. And then we'll look to see if we can get it flushed into my downside targets. Let's get the stop just above that candle there. If we're going to remain weak here, I want to see the market stay in the lower half of that first gap and not overlap this fair value gap here. If it trades through that, then I'm wrong right now. All right, if it's going to be good, should see some speed to the downside here. This entire fair value gap's already been overlapped. We don't want to see it get back above that range. All right, that stops me out on the price run here, trading all the way through that first fair value gap. So what that's going to cause me to do now is be patient, because if the market's not going to respect these levels, then what I want to be able to identify if it does turn into a high resistance liquidity run, be able to manage it really well. So tight risk, still plenty of session left. See what they give us here. Everything's still intact to the downside. Just as of right now, starting to deliver sloppy in that opening range. So I want to be careful. What I don't want to do is then go and take multiple trades inside sloppy price action if it's going to communicate that to me. Watching buy side here. Oops. Now they're back above that gap. Want to see if they want to run into these highs here. Not a trade, just watching. But like I said, my focus is more on the downside, so I need to see signatures that confirm the market's bearish to me. What I'll do many times, like for example, if I use this gap to go short and then it stops me out, I can just reverse that trade and mitigate the losing trade with half the risk. But because of how we're trading here in the first few minutes, I'm very comfortable being patient. Don't want to be too aggressive. All right, looking at S&P, one thing I want to take your attention to, if we do rally, we have equal highs here and here. They want to trade up into that. So many times what I'll do, if the first 30 minutes is sloppy, then I'll wait till 10 o'clock. So just wait till 10 o'clock for the next trade setup. Still plenty of session left. Want to get a clear read on what they want to do. So still have buy side here, and then this high here is relatively equal. All right, buy side taken. Now that we've taken out this high here and here, I want to see how we trade there. If we accelerate through that, then we have the buy side here that formed pre-market. All right, let's go over to S&P. Buy side here taken. Want to see how we trade through this high. If they accelerate through that, then you want to note this buy side here and here for ES. This would be the previous day's high here. Watching this down close here. Want to see what they do with it. All right, so trading down, using it as support, sends us to the buy side here. So this gap here, looking at this as an inversion, meaning they're going to use it as support, send it in the buy side here. Quantity one. So want to see this inversion fair value gap used as support, buy side here. Ideally, we'll stay in the upper half of this gap. Set a clock window in about 5 minutes. All right, so opening, trading down into this down close, hitting the low of that inversion fair value gap. If bullish, should show responsiveness from here to the buy side. Not a trade idea, just watching right now. My interest is going to be on the other side at 10 o'clock, see what they do with the hourly candlestick. And then getting up off the 1 minute charts, I like to so again, on my layout, I'm looking at the 15, the 5, the 1 minute. I do have the daily and the hourly as well. So I'm not just zoomed into the 1 minute like you're seeing here. So I like to get up off those time frames to allow you guys to see that. So what I'm watching here on the 5 minute is this gap in here. We did close above that, but we did not close above this one here. So now that we're below that inversion fair value gap, that's not as good for bullishness to this high here. So S&P did take out that pre-market high here. NASDAQ did not. So now we have an S&T divergence at the highs. Want to see if that can hold. All right, so now down close candle here, starting to get traded through, indicating initial weakness. So like I said, I'm gonna wait till 10 o'clock before I get any more, take any more setups here today. What I'm measuring right now, again, is if this S&T holds. And then we start to show signatures and institutional order flow that it's bearish, it's heavy. Small fair value gap in here I'm watching. Let's make that gray. Want to see if the market can respect that if we get above it. Not a trade idea, just watching order flow. 10 o'clock candle here in about 1 minute. All right, so getting back above that and closing above it. So that likely brings the buy side in here back in play. Not an easy read this morning. So looking at the hourly time frame, we have this range high, range low. I like how they took it up into a premium, and then that would be nice for continuation to the downside. But now looking at this hourly candlestick here, I want to see how we close here in a few seconds, which is starting to look like a bullish close here. So I'm going to wait again till that next 10 o'clock candle and see what they want to do with that hourly candle. Do they want to send it higher, run for buy side, or are we going to keep selling off? All right, so closing above this gap, opening down, using it as support. So want to see if they want to run buy side. Just watching here. Difficult price action in that first 30 minutes, right? A lot of overlapping, high resistance liquidity running here. So like I said, that's why as soon as the market gives me feedback that it's going to be sloppy, I want to be very patient and not risk more capital until the model forms or the market communicates that it's going to be a clean, low resistance run, which is what we want to be trading. All right, so what I'm doing during that 10 to 11 hour is I want to see what they want to do with that hourly candlestick, because then that'll give me a bias to want to work within in the lower time frames. So far, staying above this gap here. All right, S&P at the high, still holding. Watching this wick here, so it's candle open, trading higher, staying. I want to see it stay in the lower half of that wick if it's going to be bearish. But right now, I'm not liking this price action here. Look at how much overlapping price action we're seeing. Right, we have a fair value gap here. 1, 2, 3, 4, 5 candles inside this 956 fair value gap. Right, so spending too much time inside that gap for my liking. I also don't like, if you look at the 5-minute chart, no fair value gaps created yet on the 5-minute. Small one there on the 15-minute. So yeah, not looking at this SMT to hold. We're likely going to run into that buy side. Fair value gap here, trade down into that supporting price. So if we remain bullish, what will I look for today? Let's go to regular trading hours. We're going to want to note this gap here. So this is the previous day's regular trading hours gap. We'll make that green. And if we do remain bullish today, then that'll be the draw here. The previous day's regular trading hours gap. Ideally, throughout this week, I've been framing all my short setups. All the money I've made this week has been on the short end, which of course makes sense because the top-down analysis. If it does confirm it's bullish, will I pull the trigger long? I'll have to weigh that out with what I'm seeing. But this market structure here does not cause me to want to jump in and be in any rush to take a trade when I'm seeing price action like this. It's not easy to frame setups. It's a lot of deep retracements and difficult trading when it's a high resistance price run. One of the best skill sets that I've developed as a trader over the years has been identifying these days here and identifying what days I want to push capital in and what days I want to protect capital, right? And these high resistance liquidity run days, you want to be very careful because if you're not careful, you'll either give back gains or worse, blow an account, right? And that's something it's easily avoidable if you know how to identify it. So that's why in the first few minutes, one of the first things I'm measuring is institutional order flow, right? Is it communicating we're in a high resistance run or low resistance? And the way I measure that is how long do we spend inside these fair value gaps and how much overlapping price action do we see? And right now you see we're seeing a lot of overlapping price action, which just means the candles are sharing the same range. So a little three drives pattern here and a premium of this range high, this range low. Market trading through a swing low. Want to see if that'll be a market structure shift to the downside. Let's look at the hourly chart. Yeah, so hourly candle still staying in the lower half of this. Still staying in the lower half of this gap here. All right, so looking at this as a shift in market structure, but I want to see a fair value gap form and ideally be left open. If it doesn't give me signatures I want to see, then I won't pull the trigger. I want to be very demanding on price action on a day like today here. And like I said, because it's also a day with no high impact news, the probabilities of it being a high resistance are slightly higher, which is why also I'm significantly sized down today. All right, so no fair value gap created, still observing. If it goes to these highs, right, and it's trading like this, that's a price run I'm very comfortable passing up on. Right, so what would have allowed me to trust this as a shift in market structure to go lower? I would have wanted to see the market displace through it more and create a fair value gap, create an imbalance, and then ideally leave some of it open. But it's not it's not giving me that signature. So there's nothing to take a trade on, no losing transaction. And right now we have equal lows here, and now we have equal highs here and here. So right now that's a 50-50 market condition for me. So what I'll do is wait for one side of the market to get tagged or wait for institutional order flow to confirm its low resistance. But as of right now, you can see a lot of overlapping price action. Very happy being patient in this. As a developing trader, one of the best things you can do that I did a lot early on, if you can identify it's like this high resistance and you haven't taken a trade, best thing you can do is just tape read the session. Just be patient. Because like I said, these days here can be extremely problematic. But if you have a model, right, you have a trading plan, right, you know how to manage risk, then obviously it's not going to end you. But I've learned that these days here would take a lot more unnecessary losing trades if you keep trying to push really hard. So S&P still rallying. NASDAQ not joining the party. Looking at the Dow. Dow showing strength to the upside as well. At the end of the stream, I'll review the trade I took. If I do take any more, I'll review those as well. And then I'll take some questions at the end of the stream as well, kind of like we do on the Sundays. Frozen again? Why does it keep freezing? I did. I just restarted that. Strat King, how come your lives always get interrupted by ads? Yeah, that's a problem. I'm not sure why ads are playing. I don't want ads playing on the live streams. We'll have to fix that. Appreciate you letting me know. All good now. Thank you guys. Yeah, appreciate you. Yeah, OBS keeps trolling. Yeah. Samad got your 40 points. You're out. Nicely done, man. All good now. All right. All right, so buy side taken here. Now that they've ran buy stops, again, that's exactly what I want to see, looking at the 5-minute chart. When there's equal lows like this and equal highs, I'll be patient and wait for them to run one side of the range here. So now we have buy side taken. I want to see how we trade there now. Hey, Sean, you see why this wouldn't be a shift in market structure here? Good question. Yes, the low's taken out, but now we have equal highs here, and it didn't give any displacement with the fair value gap, leaving anything open. So there was nothing for me to trust that as a shift in market structure just yet. Great question. So again, now that buy side's taken, want to see what they do with it. This is yesterday's first presented gap. All right, so right now, what I'm gauging is through these highs. If we see speed through them, then we're going into yesterday's opening range gap up here in a premium. All right, so 5 minute chart, we are seeing bullish order flow, down close candle, trading down into it using as support. A lot of wicks, again, a lot of back and forth price action. I'm not a big fan of putting a lot of risk on in, but we are seeing bullish order flow, high taken out. Now, again, I want to measure how we trade above that high. Hourly chart, starting to see strength here on this hourly candle. So we'll likely see a trade into that opening range gap from yesterday. Closing above this high here. If we stay above that high, meaning we don't get down below it again, then that'll give a price run again into opening range gap here from yesterday, that green rectangle that I have. You guys can see that here on the 5 minute. 5 minute, you guys can see this range here. S&P 15-minute chart, buy side that we're watching here has been taken, right? So these equal highs, the market wasn't bearish. It traded above that hourly gap we were watching. Use it as support, launched higher into the buy side here. So you guys can see yesterday's first presented gap. First remain bullish, want to see us get above that support and then use that to rally into the previous day's opening range gap. And then how we trade through the opening range gap will tell me if they want to take it up all the way up into these buy stops here. That would be a pretty big run on buy side here, these equal highs here and here. Watching this imbalance here. All right, so we're going to frame along here using that 1 minute fair value gap. Stop loss goes below the 2 wicks here. And then we'll see if we can get a run to that, what level is it? Into that 21,393 level. All right, so we're trading in yesterday's first presented gap. I want to see us see some speed through that. All right, so I'm going to trim some risk here. Just slightly, get it under, just get it a small stop. So run below that old low, that's fine, but we need to reject that to the upside. I don't want to see us make ground through old lows. Old lows can be traded through, but we should see a rejection to the upside if we're going to get into that opening range gap from yesterday. All right, so market's taking me out again and deep retracements. All right, so with what I'm watching now, indication for me to be patient. So 2 stop losses at low risk. And market breaking down through this low here, right? Aggressively displacing through it. That's not something I want to see. So if this setup was to be valid just for a scalp into these the opening range gap, these lows would have to be rejected and displaced to the upside. I don't like how we're displacing through the low and closing below this fair value gap here. Not an easy read this morning. So what I'll have to do now at this point is measure if this is a retracement to continue higher or if this is a reversal. The first fair value gap from yesterday, like I said, I need to see some speed through that. I didn't like how the market was hitting that, staying in the lower half with the bodies and breaking down. And this fair value gap here providing no support. So now watching this fair value gap, I want to see, does it reverse its role? Does it turn into an inversion gap here? All right, so opening trading higher, hitting the low end of that inversion fair value gap. So max trades, I'll usually take in a day. I usually limit myself off at 3, even if it's with my lowest leverage. Usually 3 trades pulls the plug for me. Camera blocks it. Okay, yeah, appreciate the feedback. All right, let's go back to electronic. So based off everything I was seeing on the 15, the 5, and the 1 minute, looked like that was an easy scalp into the opening range gap, but getting these deep retracements. So watching this gap here, if we stay below that, then that could give me something on the downside. But I want to have confirmation that order flow is weak. All right, so if we stay below this inversion fair value gap, my attention turns to this sell side here. Sell side here, and then the equal lows they left pre-market. All right, so that tags me in for a short. All right, so inversion fair value gap here that we're watching, respected, stayed in the lower half, market breaking down, using a lower time frame gap to get short, and looking for continuation to the downside. As far as pyramiding, not going to pyramid today. My biggest focus once I take a couple losing trades is to protect capital, not make a whole bunch. So I'm not going to look to pyramid this up to like 10 contracts. Going to just keep it light risk here on this trade. So again, we got sell side here, and then we'll aim for the Aim for the opening range lows here. Like how we left this gap open here as a breakaway gap. So I would look at that as a shift in market structure here. All right, 30-second gap here. Want to see the act as an inversion. I don't want to see the market get above that. So ideally, we'll see the market stay in the lower half. If we get above that, then I'm not liking the lower prices anymore. It'll just likely stay in the range. All right, so now they're building in equal lows here, here, and here. Trading into this 1 minute gap. So we have one fair value gap here, a second one here, and then this up close candle, right? So from my entry to the stop, I want to have 3 key levels in between that. Like how we created this doji candle here inside that bearish order block. Market should sell off from here. Would not want to see it stay above this gap like we are right now. I want to see it quickly get under that if it's going to be valid to the downside. So as I was saying, as it trades into a deeper premium from where I entered, not really interested in building in a bigger position because again, my focus turns to capital preservation after I've taken a loss or two. Very glad I'm trading low risk today, right? Especially when I see it's a high resistance liquidity run like this. I've learned to manage the emotions, manage the psychological side. Sizing down in these high resistance liquidity runs, very important. Don't like how we're trading back up out of this range here. Would have liked to have seen it stay heavy. All right, and that is going to be the third and final stop loss of today, guys. Difficult session. So now I don't have a clear read on it, and that's something I want to share with you guys, right? If the market's giving me a hard time, now it could go higher, but I'm not willing to take any more risk in this market condition. Even if it does go higher, these deep retracements here, really hard to hold on to a trade for. I am happy that two of the trades I took were on the downside, right? In line with my higher time frame top-down analysis. So looking at the daily chart, all the money that was made for me this week was on the downside, right? Looking for lower prices. So the trades I took today, right? When I'm reviewing my setups and the trades I took, I'm looking at, would I take these trades again, right? Absolutely. Here, market ran buy stops, bias is bearish. We broke down through the gap. All things that I look for high probability. Stop me out, that's fine. Market gave me feedback that it was bullish, and then they stopped just short of that opening range gap here. And then I tried to take a long to the upside, and then deeply retracing back into the range, and we may still get back up there because now that it stopped me out of the short, that's communicating to me that they may want to take it back up into that opening range gap. But when it's delivering like this, high resistance, it's really tough to hold these trades, get in them, and see it run to full target. So because that's the case, what I'll do on these days, again, my focus completely shifts from making a lot to protecting what I've already made. So that's going to be my last trade here today. I'll do a short review here with you guys after the Q&A. So best example I can lead for you guys here is showing you by example, right? If I'm losing, that's fine. Losing is part of the game. But how do I protect what I have? How do I not go into severe drawdown, right? Protect myself from going on tilt, right? All skill sets that are extremely important to have. Because earlier on in my career, what would happen is I would take losing trades, I'd be at my desk, take a couple setups, lose, and then I start to get frustrated, right? Start to get upset, start to get emotional, and then you start making poor decisions, right? So one of the best things you can do when you identify that is stop trading, right? Because there's another day, there's more setups, and that are going to be much easier than a day like today. SMT at the previous day's high, yeah, SMT on both sides. I believe we're seeing SMT on both sides of the market right now. Looking at the NASDAQ did not take out this high, whereas the ES did. Whoops. Not USD CAD. Whereas the S&P did. Jerry, you interested in taking a buy to the previous opening range gap? Yeah, that's what I was looking for here. Yeah. Manny, bro needs to stream more on YouTube. Yeah, it's something I'll be doing here more consistently. Glad you guys showed out. Over 100 people loving that. So it's something I'll be doing more often. Maybe I'll look to do it once a week. Ahmed, bro, you're in trouble. It's just one transaction, brother, or one day of trading, right? If one day of trading is making or breaking you or putting you in trouble, then you're doing something wrong, my man. We put an S&P at the low. Yeah, I see that, Sky. Yeah, S&T on both sides, right? Screen's frozen again. One moment, guys. All right, guys, should be back on now. Let me double check. Yeah, should be good to go. Apologize for all the interruptions with the screen freezing. I'm not sure what's going on. I need to get that fixed. Sky, as traders, we need to normalize taking trade, lend the probabilities, model play out over time. Absolutely. Right, it's the long game. Glad you're here with us on a day like today. Extremely helpful. Glad to help, right? That's why I do it. And this is why every day I'm going live, showing, for example, yesterday, right, was a day I was able to get in a profitable setup, was able to make about 1K, something like that across all my accounts. But I didn't get full target, right? I got an entry, market deeply retraced, stopped me out, then ran to exactly where I was thinking it was going. But the stop loss was in profits. It was a profitable transaction. But sometimes that's how it is, right? Sometimes the market stops you out. Sometimes you get in, it's not going to run to your targets. And sometimes it's just really easy trading, right? That's why I showed my live trading. Not many are willing to do this, and a lot of respect to those that are, right? Because it's not easy to trade, number one, but then trade and do it live. So the reason I like to show this is because you need to be able to see how to lose, how to win and stop, how to lose and stop, right? All very important habits that I've learned that keep me profitable month over month, right? One of the things I've learned with having a long-term mindset is being able to think of this as a long-term game, right? And not getting excited day to day with one day, one transaction, right? Because if that's the case, then you're not doing something right with your risk management or your money management, right? So all things to consider. Taj, good demonstration of managing risk and navigating tough conditions. Appreciate that. Yeah, definitely not easy today, right? Looking at this day, not easy trading at all. Which is why no matter how good you get at analyzing charts, right? No matter how good I get at predicting the market, I always need to lean on risk management, right? Because it doesn't matter how good you get, these high resistance days, if you push a lot, can do a lot of damage to you. Julio, not easy to trade live. We appreciate you. Appreciate you joining, brother. Amazing risk management and invalidation levels was a hard day with NVIDIA earnings. As an old student, I've seen you have 4 losses in a row, then come out the week green in the same week. Absolutely, brother. It's part of the business, no doubt. Appreciate you, Julio. Islam, placing the stop loss above or below 3 PD arrays, does that mean it needs to be a different PD array, or can it be 3 fair value gaps? It can be any, right? Or it can be 3 fair value gaps. So in this case, on this short here, I was using this fair value gap here, this one here, and this up close candle. Because if we get through that, it tells me one of two things. Either I'm wrong and it's going to go higher, or it's going to do what we're doing here, be really sloppy. Either of which I don't want to be in the trade. So that's why the 3 PD array rule has been so helpful, because it keeps me out of bad conditions. And of course, if I'm wrong, then I want to know that right away. The better you get at reading price action, the more you're able to identify different PD arrays and have tighter stop placement. There's no rush to get to that point. If you're using 3 fair value gaps and that works for you, nothing wrong with that. But the key is you do want to have 3 key levels between an entry and a stop loss, because it's going to give you that feedback of those one of two things, right? Again, in summary, either you're wrong and it's going in the opposite direction, or it's just going to be a sloppy day like this and stay in the range, both of which you want to be able to identify as quick as possible. Thanks for the live stream today. Love the insights as always. Absolutely, Sky. Appreciate you guys joining us. Showing us how to manage losses on hard days is key. Absolutely, right? And this was one of the things that held me back, right, as a trader. It added years onto my journey of consistent profitability because I didn't know how to manage these days, right? I'd fold under pressure, right? And what do I mean by pressure? Well, when you take a few losing trades, that builds a little bit of pressure. And you have to be able to handle that like a professional. You can't go on tilt. You can't get upset. You can't get angry at the market. Because imagine now if I keep taking 4, 5, 6 trades in this market structure. It's just not going to end well because the probabilities aren't in my favor this day. So one of the first things I want to do as an analyst is, if I can identify the probabilities aren't in my favor, pull the plug, stop trading, right? Tomorrow's a new day, Friday's another day, and plenty more opportunities to come. Nick, this was awesome to watch. Thank you. Yeah, appreciate you guys joining us. Thanks for the stream. Look forward to the next. Absolutely. Strat and another ad. Yeah, appreciate you letting me know. Yeah, that's something we'll have to get sorted out. I'm not sure what's going on here. Let me go ahead and note that down here. And as always, the recording will be up. So if you miss anything, you'll be able to see that in the recording. And love to see your risk management on such a horrible day. Thank you. Look forward to your next YouTube live. Absolutely, and appreciate you joining us. Thanks for the support. Damn, you're a wrangler. I didn't want to touch the charts, especially after making profits this month. Yeah, and the good thing is with what I do with my trading, I'm having several different accounts, multiple income streams from this. So this is just one of the accounts that I'm trading. For me, since it was a light risk day, what does that mean for me? Well, one of two things. I size down on the accounts I'm trading, but I also reduce the amount of accounts I'm trading. So I'm not trading 3 accounts, 4 accounts on a day like today. This is the only account I traded here today, right? So keeping it very light, keeping it low risk because, as you said, right, if you're up profits on the month, no need to give that back and close out the month red, especially after putting in the hard work to make it green, right? So again, you can see now fair value gap here, 1, 2, 3, 4, 5, 6, 7 candles inside that range, communicating we're in a high resistance liquidity run. You can rewind and then 2x. No ads on my screen. Appreciate it, Cleo. Thanks for the help. Dan, when are you likely to live stream again? I'll have to let you guys know. Kind of like we did yesterday. I'll let you guys know beforehand. I will let you guys know before we're live, at least the day before. Will I go live again this week? We'll have to see, but definitely next week. I'll definitely make this a habit of going live once a week, hang out with you guys. Curtis, salute. Good to see you. Grand, thank you for your time. Juggling all these things at once, hearing your voice inflection as price unfolded. Yeah, glad it's helpful. One of the things that I get a lot of feedback from when I'm live is calling the charts, right? Sharing what I'm looking for, what I want to see, what I don't want to see. And if the market gives me what I don't want to see, hey, that's nothing wrong with that, right? I don't have control over the market. I have to bend to the market's will, right? So if the market's telling me it's high resistance, then today's just not a day I can make a lot of money, right? And I have to accept that. But the good thing is with the way we look at price action, we're able to measure that, right? So it's not going to get to 1130. Here I've taken, 6 losing trades, right? And we're not able to identify it. It's like, well, where'd that come from, right? We're able to identify that the market's high resistance and manage it accordingly, right? And that's part of the business. Trento, why do you trade different accounts? Great question. Great question. The reason I trade multiple accounts is because as a full-time day trader, one of the things that you have to be able to do is reduce emotions. One of the ways I'm able to do that is having multiple income streams from the market. So there's 2 different live accounts that I trade personally and 3 different funded accounts that I'm working with right now. So what that allows me to do is when I go up on some accounts, I'm up 4, 5, 6K. I don't need to touch those accounts anymore and just lock in that green for the month. So it helps reduce the emotions, reduce the stress, and create different income streams with the same skill set. So that's why I trade multiple accounts. And of course, being able to parlay it, right? If it's a really good day, everything's clean, it's easy to see, and then I can trade them all together, right? And then I can run up equity a lot quicker across multiple different accounts. So a few reasons why I trade multiple accounts. What does your trading review process look like? I'll get into that in a moment. That's a great question. Grand, hearing your analysis confirms I'm on the right track with patience and risk management. Love to hear that. Love to hear that. That's how you know you're in the right direction, right? When your focus is managing risk, controlling your trade frequency, those are all things that indicate that you're heading in the right direction. Maria, been with Dylan over a year in the community, professional mindset, capital preservation over profit, stops when the conditions are not conducive for low resistance liquidity run, ends each month green, witnessed it all. Really appreciate that, Maria. Big shout out to Maria, working hard. Be on the lookout for Maria soon. Calling it live is invaluable. Thanks, Dylan, much appreciated. Absolutely, glad it was helpful. That's why I wanted to come out here with you guys, show you guys how I look at the market live, how I weigh out processes and what it is that, or weigh out my processes and what it is that I'm looking for. Jeff, thanks, Dylan, learning a ton. Appreciate you, my man. Mentorship is open in the Discord. I believe we have maybe 1 or 2 spots left for this week. So if you're interested in working with myself, my team directly, us giving you our proven process to get to where you're at, to where you want to be, that's all available in the free Discord. Wasim, I really want to thank you, Dylan. Ever since I started watching your weekly forecast, I became a much better trader. Hope you stay blessed, man. Appreciate you, brother. Thank you very much. Really appreciate the feedback. Tamang, hit the like button. Please do. Right? If you guys enjoyed the stream, got some value from it, please do hit the like button. Very helpful for me. All right. So as far as reviewing my trade, that's something I'll go ahead and touch on now. Market's not doing a whole lot. Like I said, not interested in calling it, touching it, because if I push a lot on a day like today, it's not going to be pretty, right? And I'm able to identify that and see that early on. So looking at the first short setup that I took here, you guys saw the pre-market analysis, right? Daily, hourly, 15, 5. I have what I'm looking for. Once I frame what I'm looking for, then I have to wait for the market to set up the conditions that allow me to execute. So if I'm bearish and I'm looking for lower prices, at 9:30, I want to be patient. I want to see, do they run it higher and take out buy stops and then break it down and shift order flow? If I get that, that's absolutely a high probability model in line with my top-down analysis. And then when I'm reviewing my trades, I'm asking myself, okay, is this a trade I would take again? Absolutely. If that's the case, then that's a good loss. Now, let's say, for example, I get stopped out here and then I go long here trying to reverse it. Say, okay, it stopped me out of the short. Now I'm trying to go long and reverse it. That would not be a good loss. Why? Because I've already taken 3 with reduced risk, right? The market's already given me feedback. It's a difficult day. So let's say I did take another 4th trade here and I went long. That would not be a good loss because, again, it's outside my trading plan. The market's already communicated its low probability for today. And that would be journaled as a bad loss, right? I don't take many bad losses anymore because I've really refined my strategy and my trading plan to a point where I'm not taking a lot of bad losing trades. And then looking at the next trade here, right? Order flow turned bullish. I could see this opening range gap here is the draw. Use the fair value gap, kept tight risk on it. Market stopped me out. Good loss. Happy with the model, happy with what I was looking for. I could frame the hourly candle trading into this level here. So now I have what? Top-down analysis behind me if the market was going to trade into these levels here. So this trade here, I would chalk that up as well. Another good losing trade, because if I saw this model again, I would absolutely trade it, right? And that's how I go about measuring good losses versus bad losses. And over the course of a month, if you just take high quality trades, then the equity curve is going to reflect that, right? And that's more so what I'm focusing on when I'm reviewing my trade data, when I'm reviewing trades that I'm taking. I want to measure, was it in line with my plan? Was it in line with my process? And is it a trade I would take again? And if you can say yes to those 3 things, then it's a good transaction. And it's just the cost of doing business. What's a good way to end a losing streak? So the biggest thing to do when you're in a losing streak is size down. Size down because you don't want to trade more risk when you're already losing. So one of the things I've learned, and credits to ICT with this one, with flatlining equity drawdown, it was a concept I learned years ago that was extremely helpful for me as a trader. What does that mean? Well, when you start losing trades, you have to be able to flatline the equity curve, which means, so the equity curve doesn't look like a roller coaster. After you take winning trades, and then you go into a losing streak, you want to be able to flatline that drawdown, meaning you don't keep taking big losing trades. The number one way you do that is you immediately size down. And then once you get the equity curve back in the right direction with sizing down, and then you make back the previous loss, then the loss before that, then you can return to the original position size. That's how I teach to manage risk. That's how I do it myself. And that's what I do when I'm in a losing streak. If I am not in sync with price for an entire week, right? Like let's say, for example, and this isn't the case, but let's say I lost Monday, lost Tuesday, and then again, I lose today. Okay, I'm probably going to shut it down for the week and not even worry about Thursday, Friday, because I'm not in sync with price action, right? Market's not telling me I'm in line with it. So the best thing I can do is do what? Step to the sidelines, refresh, take a day off, take the rest of the week off. And that's what I do when I'm in a losing streak. Because the key when you're in a losing streak is not losing the account or losing profits that you've built up, right? So the way you do that is the suggestions that I shared here. And then what have I done in a losing streak to overcome it? That right there. Because the priorities of the game shift, right? When you're running up equity, the focus is making. But as soon as you start going into a few losing trades, my shift completely focuses to making to protecting. And that's something that has served me extremely well over my years of trading. And then you can see here, after trading above that order block here, market telling me what? It's sloppy. So remember, I told you one of two things it's going to indicate to me. Either the market's bullish and it's going to reverse, or it's going to be sloppy and unstructured. Both of which I want to know as quick as possible, because it allows me to pull the plug and not spend more mental capital in this market condition. Alrighty, guys, so that's going to be it for me here today. So I reviewed the trades I was taking. Then when we had the first, just looking at the last one here, first presented gap, we broke down. We respected this inversion fair value gap here. Market sold off, used this fair value gap here to go short with the stop here, aiming for the equal lows here and here, which is also in line with my higher time frame top-down analysis. So again, another good trade. I'm satisfied with it, and that's what is going to go in my review journal. Take a look at recipe. All right, guys, don't see any more questions. Let me check the Discord here real quick. Nope. All right, guys, so that's going to be it for me here today. Like I said, best thing I can do is lead by example and show you guys how to manage risk, show you guys how I stay within my trading plan every single day. And that's what I'm going to do here today, guys. So I will not be taking any more trades today. I will not be trying to fix the drawdown, right? That'll be fixed easily with time, right? You want to be comfortable when you're in drawdown. You don't want to get uncomfortable and let it force you to make impulsive decisions, right? So the best thing I can do is show you guys by example, again, how I'm managing risk and pulling the plug on trading today. And as you can see, that is the best idea here. Can you drop a video on how you would trade London? Yeah, that's something I can do. When I start getting back into YouTube, I've been putting in a lot of work with what I'm doing, again, with those that I'm working with now, and the content, it's a whole lot of work on my end that takes up a lot of my time. When I get back to making consistent videos on YouTube for you guys, that's absolutely something I'll look to go and do for you guys. Show you guys London, or how I look at London, how I look at the New York, and how I look at the PM session. Absolutely. Adam, how can we enter live trading without mentorship? So that's not something we currently offer. Reason being, those that get the best results have the full package, right? Everything we're teaching, managing risk, the actual process of becoming a profitable trader, which to your surprise, many don't even know what that is. And it's a simple 4-step process. So without all the guidelines, the structure, and the understanding, it turns into a signal service. And unfortunately, I want to be able to get you guys the best results. So that's personally not something that we're offering as of right now. Like I said, I will be looking to go live on YouTube once a week. So that'll be something I'll look to give to those of you guys that are in the free community that may not be able to take that next step and invest in yourselves with us. But again, it's not necessary. If you already know what you're doing, you have a process, you know where you're at and looking for, and you know where you're looking to go, then it's something you may not need. Good old Francis. Everyone has their opinion, and I can understand why many are so skeptical, especially in a business with a lot of people that aren't willing to show it live, show what they're doing. I can see why many people are skeptical. No hate, Francis. Everyone's got their own thing, my man. All right, brother. Thank you for today. Absolutely, Adam. And it's something I'll be doing more so going forward. Free live streams. Like I said, I'll look to do it about once a week when I can in my schedule. Curtis, have a good evening, sir, and thank you. Absolutely, guys. Take care. So as of right now, usually I like to leave you guys off with thoughts on what I'm looking for the remainder of the session. But right now, it's 50-50 for me. They could drive it up into that opening range gap up here, or they could want to do some work with the sell side and the equal lows that they've left down here. So 50-50 for me. I don't have a clear read on where we're going, so that's something I'm going to give you guys. All right, don't see any further questions. Abraham, need to see again today how to do my risk management properly. Huge loss today. Yeah, no worries, Abraham. It's something that'll be covered in great detail as we go through the teachings that you're going through. And we'll talk about trading plan, flatlining equity drawdown, and those are all things we'll cover. But good thing to journal, recognize, so that it doesn't turn into a big losing day the next time, and you're able to start keeping those losers managed even better. So you're able to better manage those losers and flatline and keep that equity curve nice and smooth. All things I had to learn as well, my man. Alrighty, guys. I don't see any further questions. Appreciate you guys joining us here today. Like I said, when we're live next time, I'll be sure to let you guys know. Appreciate the support. Appreciate you guys joining us here. Something we'll definitely look to do again, guys. Take care. Have an awesome rest of your day, and I'll see you guys on the next one.